Good morning, everyone. This is Tara Sewell, internal wholesaler with Financial Markets. Thank you for joining us today. Your lines are muted. If you have questions, please reach out to your internal wholesaler after the call. Today, we will be giving away a smart TV or a locking gun safe. 4 finalists will receive $50 Amazon gift card, and we will also be outlining life settlements. First of all, from all of us here at Financial Markets and the carriers you sell each day, thank you. All of you play a critical role in ensuring that clients continue to have access to the protection and the opportunity that life insurance and annuities provide. Thank you to all the producers on the call. Together, we protect families and their financial futures. Congratulations to Angie. She was the winner of our Christmas shopping spree. And congratulations to our runners-up. Let's dive into the details of our 2022 FMI Agent March Madness giveaway. For every application submitted from January 3rd through April 1st, you earned 1 ticket for every application that you submitted, 1 ticket for every $10,000 in anticipated annuity premium, and 1 ticket for every $1,000 anticipated life, Medicare supplement, disability income, or long-term care premium. You earned double tickets for applications with our premier carriers. And then lastly, you earned triple tickets for every case that was written and placed before April 1st. Today, the odds are in your favor. We have 6,475 tickets in our hat. Your name can only be drawn once, and you must be pre-registered with your full name and present for the duration of the webinar in order to be eligible. So let's get started with our first finalist. So we've been shuffling the hat, and I will shuffle it one last time with our almost 6,500 tickets. And we will drop those tickets in the hat. And now we're looking for our first finalist. Kirby Bowden with 858 tickets. Neil, is Kirby on the call today?
Let me take a look here, Tara. And Kirby is on the call. Congratulations.
Congratulations, Kirby. There are many great tools and resources available to you on our website, fmiAgent.com. Now you have another quote option, WinFlex Web. This is a tool that our internal wholesalers have used for many years to design and generate NAIC-compliant illustrations. By accessing WinFlex Web through fmiAgent.com, you too now have access to all the top carriers. You can find WinFlex Web under Agent Tools. Check it out the next time you're on fmiAgent.com. Now to our second finalist. Again, Kirby Bowden is our first finalist. And our second finalist, Robert Jeffers, 104 tickets in the hat. Is Robert on the call?
Let's take a look here. I don't see him under Bob. Let me try Robert. And he is not on the call, Tara, so your odds are getting better.
We will draw again. We're looking for our second finalist, and we have drawn Kirby Bowden again. Again, you can only be drawn once, so we are looking for our second finalist, Riley O'Connell with 4 tickets. Is Riley on the call?
Let's take a look, Tara. And I do not see Riley on the call.
Okay. Again, folks, you can qualify only if you are on the call. Kyle Fink, 21 tickets in the hat. Is Kyle on the call today?
Be just a moment here. I do not see him on the call, Tara.
Okay, we are still looking for our second finalist, Robert Lane with 113 tickets. Is Rob on the call?
We're looking here. And Rob is on the call.
All right. Congratulations, Rob. So we have 2 finalists so far, Kirby Bowden and Rob Lane. Now, you can subscribe to Financial Markets YouTube channel at youtube.com/fmiAgent. You will find webinar replays, sales concepts, case studies, consumer videos, and Dow's Weekly Digest by our very own Ed Bartling. Visit our page, check out some videos, and don't forget, hit subscribe. Now our third finalist, pull up our hat again. Just to recap, we have two finalists so far, Kirby Bowden and Rob Lane, and we're looking for our third finalist. Ross Bauer with 88 tickets. Is Ross on the call, Neil?
And Tara, Ross is on the call.
Congratulations, Ross. You are our third finalist. As a producer working with Financial Markets, you have access to many great life insurance products and options. Today, Neil Sperling, Vice President of Financial Markets, will be outlining life settlements. You will not be disappointed with what you're about to hear. Neil?
Well, thank you, Tara. And we'll get this going here. Congratulations, Kirby, Rob, and Ross, for being finalists here. All right. So thank you, Tara, and thank you to all for joining us today, and good luck to those of you participating in the 2022 fmiAgent March Madness giveaway. Today I've been asked to discuss the topic of life settlements. You probably do not hear much from Financial Markets about life settlements, and that is simply because we do not promote them. Why, you might ask? Because we like to see people keep their life insurance in force. The reason we're having this discussion today is to be sure that you know this is an option for your clients when the coverage will otherwise be lapsed. So what is a life settlement? It's when a policy owner transfers ownership of their policy to a buyer for cash or other consideration, such as a reduced death benefit. The entity that purchased the policy from the original owner continues premium payments and collects the death benefit as a return on their investment upon death of the insured. It's really quite simple from the definition standpoint. Sometimes people relate a life settlement to a viatical settlement. Financial Markets does not facilitate viatical settlements. A viatical settlement is where the insured person has a 24 months or less life expectancy. In cases like this, we believe the client should keep the policy in force considering the benefits are potentially imminent. So I mentioned what a life settlement is and what it maybe is not. I also mentioned we like to see people keep their coverage in force. So when does a life settlement make sense for a policy owner? How about when the coverage is no longer needed? Maybe they had the coverage to secure a loan where the loan obligation has been paid off, or they had their policy for family security of income replacement, and the person's now retired. While I would argue they should keep the coverage, the policy owner may think or believe they no longer need the coverage. How about affordability? Maybe they have a permanent policy and they have not funded it properly and it's in jeopardy of lapse, or they have to pay a higher premium and can no longer afford them. Wouldn't it be nice to get a fair market value for the policy rather than the potential small cash surrender value, if any? On the same lines of affordability, what if your client has a convertible term policy near the end of the term? Maybe they cannot afford the conversion policy. That could be another potential life settlement. Last, and likely the most unfortunate, the client needs cash for unexpected personal, business, or medical expenses. This could be a heaven-sent opportunity for cash liquidity when needed most. So these are just some common examples of where a life settlement should be considered. You probably receive many calls from settlement providers eager for your business. So why use Financial Markets for your settlement business? The first thing is our expertise. We've been doing life settlements for over 16 years. We understand the marketplace and understand what pricing looks like. If you go to a direct settlement company, they have one thing in mind: to acquire the policy at the lowest price. The lower the price they pay for the policy, the better the investment return is for them. We want to get the fair market value, which is sometimes difficult to quantify. To achieve a fair market value, we utilize two different platforms. The first platform is direct funding. This is where financial markets goes directly to a specific individual institutional buyer based on our evaluation of the case. Going direct to a buyer results in a faster process, and therefore your client does not have to keep funding their policy at all, or at least not for a long time. The second platform, in my opinion, is quite exciting. This is our auction platform where we solicit anywhere from 16 to 23 institutional buyers at the same time in an auction format. Often we will run more than one auction for an individual policy, driving up the ultimate offer you can deliver to your client. The expertise and reach we have in this market will result in more success in your potential settlement cases. Okay, I've been talking too long, but I'm finally to the agenda for the discussion today. We will discuss who settlements are important to and why, take a look at good potential clients and which product types sell the best, how much money your client can expect from a settlement, and finally, the process of a settlement. But don't worry, we're just hitting on the high-level overview today. Your internal wholesaler here at Financial Markets will be happy to work with you on your general questions and, of course, specific cases. So who is a settlement important to? Well, of course, the client. After all, that's the ultimate goal. If the client truly expects to lapse or surrender their policy, don't let it happen until you see if a settlement is a possibility. Maybe they can no longer afford their premium, like mentioned before. Maybe they need cash for medical needs or other important expenses. Or here's some unique reasons. How about freeing up money for excess retirement income needs? Or maybe they're in Medicaid spend down situation and they can use additional funds to remain in a private pay facility. What about business policies? Maybe a second generation finished a buyout or earnout from the original owner and the insurance is no longer needed. This would be a great shot in the arm for getting capital rather than surrendering the policy. A similar story could be found in a key person retiring from a business. Again, for all of the above reasons, if they're going to lapse the policy anyway, find out if it has value above the surrender value. It can bring great value to your clients. All right, so let's look at life settlements from the insurance company perspective. Number one, this is not the intended use for life insurance. Life insurance is intended to protect wealth and generally is not an investment. Though I would argue life insurance can be a very unique tool in financial planning that can certainly include accumulation and distribution, like an investment, but technically life insurance is for wealth protection. When investors are buying policies from policy owners, the life insurance becomes an investment. When most persons purchase permanent insurance, aside from most no-lapse guarantee products, these permanent policies build cash value. And for good reason, the cash value helps keep the policy in force into the older age years as the mortality costs increase. But a settlement company is not going to behave that way. They're going to pay the bare bones minimum allowable annual premium to carry the coverage year by year. So this leaves more at risk for the insurance company to pay above the cash value as compared to the typical consumer-owned policy. Next, lapse rates. Insurance company actuaries are some of the most brilliant mathematicians in the financial world. They can, with a very small margin of error, predict lapse rates year by year for a block of business. But cases that are owned by a settlement funder do not lapse. They simply do not lapse. In the event a settlement funder has financial woes, they'll just resell the policy to another funder to help liquidity. There is always a fair market value for a life insurance policy. Now, how about the mechanics of a policy owned by a settlement institution versus a consumer? Do consumers request an in-force illustration each year? Probably not. Does a settlement institution? You bet they do. They request in-force illustrations every single year, and they often request several illustrations each year to be sure they're getting the best bang for their buck. So not only do settlements cause lower than expected lapse rates and higher net amounts at risk, they cost the insurance company higher human resource costs. Ultimately, Life settlements are now figured into actuarial determination of life insurance premium, so we're all paying a little for the potential that some policies will be sold. Now for you, what's in it for you? Of course, there's compensation. You earn nothing when the policy is surrendered, and rather you might lose money if the policy pays renewal commission. But what else? How about a client surrendering their policy for the cash value? Would it be a dereliction of duty not to inform them of the potential of a life settlement? There have been court cases where this has been the case. The most notable was a case in California several years ago where the damages were determined to be in excess of $20 million. In that case, the policy had very little cash value and the policy owner met the advisor and requested to surrender the policy. The advisor's broker-dealer at the time did not allow their advisors to conduct life settlement transactions. Therefore, the advisor did not tell the client about the option. Death of the insured occurred shortly after, and the beneficiaries wanted to know where the death benefit was. They found the deceased had surrendered the policy for a meager surrender value. This is a monumental case. I think it's important for you to mention the settlement option when lapse or surrender is contemplated for your due diligence. And for our advisor friends on the call today that are acting as fiduciaries, this may be even more important to your client-focused recommendations. Lastly, when your client is surrendering a policy and you find value in a life settlement, you become the hero, and everyone likes to be a hero from time to time. So, the ideal client. This is a very rough criteria. Every case is so unique. Don't pass over a potential case if it does not fit this criteria, but this is good information to keep in the back of your mind to identify potential cases. I would say if you have a client age 70 and over with a $100,000 or greater permanent policy or convertible term, and the client will otherwise be lapsing or surrendering the policy, see if a settlement may fit. The 70 and older guideline is out the window if you have a person with a dreaded illness with a dramatically shortened life expectancy. Now, you see we indicate ideal death benefit minimum of $250,000. We frequently process cases less than $250,000, not less than $100,000, but certainly less than $250,000. The problem with smaller cases is the appetite of the buyers. If they can buy a larger policy with the same time invested in the transaction, they will. So generally, we see better offers as a percentage of the death benefit at larger face amounts. Just something for you to keep in mind. All right, so what product types work best in a settlement? The best overall is a policy with a low cash value. Think about it. The policy owner could surrender the policy for the cash value from the insurance company, right? So if they have a high cash value, the settlement buyer would need to pay more than the cash surrender value for a settlement to make sense. So if a policy has high cash value, that cash value may exceed the fair market value of the policy. Conversely, if the cash value is very low relative to the death benefit, there's more room to provide value to the policy owner upon doing a settlement compared to surrendering the policy for its cash value. The product most attractive to settlement buyers is by far a traditional fixed universal life. A very close second is an index universal life. Oftentimes an index UL will have a lower fixed rate than a traditional fixed UL, so that's considered in pricing the value. But both current assumption fixed and current assumption index UL products are by far the most attractive to buyers. You would think that a no-lapse guarantee UL would be attractive, and it is, but not more attractive than current assumption products in general. In a no-lapse guarantee UL, the settlement buyer generally cannot simply pay the minimum cost of insurance and expense charges annually. Rather, they'll need to pay that no-lapse premium, and that makes the acquisition cost greater than the current assumption products. You see variable universal life in the middle. It's not that variable products price poorly. It is there's not as many buyers purchasing variable products for certain reasons. In the case of variable products, a smaller group of buyers results in less competitive offers compared to the large number of buyers seeking fixed, non-variable products. As we mentioned earlier, convertible term might be a good fit. It just depends on what it is convertible to. Any type of whole life is rather difficult to sell, mainly because at the older ages, the cash value will exceed the fair market value of the policy, leaving very little room for life settlement value compared to cash surrender of the policy. But just because it's a whole life plan, if you think there could be value, check with us. We'd be happy to take a look. Here are some ideas to keep in the back of your head. Again, this is only if the client ultimately would be surrendering or lapsing their policy anyway. Like we discussed a moment ago, low cash value policies work the best. Another thing that brings value to a policy is if it was issued at a favorable rate class and they've had a change in health. In that case, the client is holding a death benefit at a potentially lower cost than their current mortality dictates. One thing to keep in mind is that no settlement buyer will purchase a policy during the contestable period. So generally, the policy cannot be sold during the first 2 years since the policy was issued, as most states have a 2-year contestability period. There's a small handful of states that still have the 2-year contestability period, but dictate by state insurance regulation, settlements are not allowed in the first 5 policy years from issue. Just check with your internal wholesaler and they can let you know the minimum period for your state. All right, let's get to an example of a case. Here is a survivorship policy. It's a no-lapse guarantee with Lincoln for an 82 and age 80 couple for $2.3 million. They intended to lapse the coverage and get back the small surrender value since they could no longer afford the premium due to their longevity. So what did they have to contemplate? Of course, they could surrender the policy for the cash value, which was around $67,000. But that did not feel good considering the cash value wasn't even as much as the annual premium they were formerly paying. So we went to Lincoln and requested an in-force illustration to see what we could do with no further premiums, but still to carry coverage for lifetime. The result was around $310,000. And that was actually quite appealing to them and likely what they would have done had the advisor not considered to mention a life settlement. So what could a settlement bring in a no-lapse SUL for a couple in their early 80s? So again, their first 2 options were surrender for the $67,000 or take a $310,000 policy requiring no further premium. As a result of the life settlement research, we were able to give the client 2 options, $469,000 in cash or $750,000 retained death benefit. To say the least, they were quite pleased with the opportunity. Now, they elected the cash option as money was tight, and they could use it to generate retirement income. So what is a retained death benefit? This is where instead of the client receiving cash for the sale of their policy, they receive a contractual promise of a specific portion of the death benefit for their beneficiaries. In this case, the settlement buyer would pay all the premiums on the policy for the full $2.3 million face, and the settlement buyer would be beneficiary of nearly $1.6 million, and there would be a personal beneficiary of the original policy owner for $750,000. In this case, the settlement buyer would not have needed to pay the $469,000 out in acquisition costs, and based on the life expectancy and necessary premiums, they were able to price that into a death benefit. So keep in mind, the retained death benefit is an option that most of our buyers will offer if requested. Like the example we just reviewed, you know there are options for cash payout to the policy owner or retaining a portion of the death benefit. The third option would be a combination of the 2. This is where the client would receive amounts lower than the cash-only offer and lower than the retained death benefit only option, but they receive some cash and some retained death benefit. And this is subject to the funder allowing retained death benefit options and combo options. So what about taxes? And here's a caveat. Please know this is not intended to provide tax advice. For such matters, please consult a qualified professional. For cash-out life settlements, the client is not issued a 1099 until and unless the cash payout exceeds the cost basis of the policy up to the date of the sale. Think of this no different than a return of basis. Cash received for amounts above that but less than the cash surrender value are taxed at ordinary income tax. This is, of course, no different than how the policy owner would be taxed upon surrendering a policy. But for amounts above the surrender value, those are generally considered capital gains, which are generally have a lower tax rate than ordinary income. There are newer IRS revenue rulings on life settlement taxation, which has given the industry much more peace of mind when evaluating life settlements. For retained death benefit settlements, generally there is no taxable event, and the death benefit, once paid, is generally income tax-free. So earlier I mentioned we had two platforms, direct funding and auction. We pulled 5 cases to show you the appeal of both. Both are essential to your success. When you bring a case to us, we will look at both options and determine which path will be most beneficial to your case. So the first case here is on a current assumption survivor UL. You'll see the direct funding avenue provided the best value at $425,000 compared to just $283,000 at auction. The next one shown was a bit of a surprise. You would think at age 92 with $900,000 death benefit, it would bring a great offer. But the buyer needs to consider the premium too. This policy was underfunded over the years, and to keep it afloat, it required more than $100,000 annual premium. We had no offer with a direct funder, but we're pleased to provide value at auction for a little over $50,000. You can see the other cases listed. There can be a large difference between which avenue to proceed, and we'll help you determine which avenue will be best based on your individual case. That's what we're here for. So what next? You have a case in mind, or you come across a case, we have a simple way for you to request valuation of a policy for a potential settlement. At fmiAgent.com, in our products area, you'll find life settlements listed as a product. There, you will find various additional information about settlements, as well as when you scroll down to the bottom of the settlements page, you'll find a valuation request form. This is a PDF that you can fill out to request a pre-pricing. The valuation request form is only 2 pages, and you will see that in the handout section of your go-to webinar control panel. It's really simple to complete and a great tool to get you started on a case. So, to get a valuation, we need a few things from you. First, our in-force illustration. This is so we can stress test the policy to determine its value. First, you'll get an illustration as is, no changes. Basically, this is the normal in-force illustration you would get for an annual review. Get a second illustration showing no further premiums being paid. Then, third and most important illustration is a premium solve for level premium to carry coverage to age 100, non-guaranteed, or you might call it projected to age 100. If it is an index or variable product, have all of the cash value allocated to the fixed account or the money market sub-account for all of these quotes. Then get as much health information as you can. Since life settlements are priced on life expectancy, the more adverse the medical history, the better the offer can be for the settlement. You can record the medical information on the pre-screen valuation form or add a sheet. Once this is all together, get it to your internal wholesaler here at Financial Markets, and we'll get you a valuation within a few days. Don't let a surrender or lapse happen without seeing what the fair market value of the policy is. If we determine the case is most suitable for auction, you'll get a report like this. It will show you the potential range of pricing we may expect at auction. If you want to move forward, we'll get you the paperwork. If we determine the case is most suitable for direct funding, we simply communicate back to you the gross offer and see where you'd like to go. And now that I mentioned the gross offer, this is where your commission comes in. There are very loose guidelines to compensation on life settlements. You may hear some settlement providers defining compensation at 6% of the gross offer or a percentage of the face. We do not impose those constraints. You select what you want in compensation. Permitting the settlement buyer is comfortable with that amount, that is what you'll get. But Please know, Financial Markets is a full disclosure settlement broker. The compensation paid from the gross settlement is disclosed to the policy owner with the settlement documents. I won't go over each step in detail, but here is the basic process of a settlement. The duration shown on the slide reflect a settlement going through auction. You can pretty much cut the process times in half for a direct funding settlement. Basically, if the client likes our pre-valuation numbers and wants to move forward with settlement, you collect an application, much like a short life insurance application. We collect medical records, if necessary, and submit to a life expectancy company. The life expectancy company is basically comprised of underwriters that specialize in statistical life expectancy calculation based on an individual's age along with their current and past medical history. There are three main life expectancy firms, and they all right now have a backlog like a lot of businesses. To get a life expectancy report today, it's taking on average 4 to 6 weeks. We refer to the life expectancy reports as an LE. So once the LE comes back, we run a pricing model again on the case, and if it's going to auction, we package the file anonymously and send it to our network of life settlement buyers. The first auction round is normally about 2 weeks. When we close the first auction, we determine if we reached a reasonable offer. If we do feel we reached a reasonable offer, we'll get that to you and you can present it to your client. If we think there's more value in the policy, we'll reopen the auction, starting at the previous auction's highest bid. And we'll repeat that until we feel we have reached maximum value for the policy. At this point, you present the offer to your client. If they accept, they'll sign a letter of intent. We will then work with the settlement funding institution to prepare all the paperwork. And let me tell you, there's a lot of paperwork for settlements. But the nice thing is, we prepare all the paperwork for you, so all you have to do is collect signatures. I compare settlement paperwork to that of what you might expect to sign in a home mortgage. Once these documents are completed, depending on the state contract laws, we will allow for the days where the client can rescind their acceptance of the offer. Once the rescission period is complete, normally 3 to 10 days, the settlement provider will begin ownership change with the insurance company. Once the ownership and beneficiaries have been changed, funds will be released to the policy owner, and Commission 2 is paid at this time. It may sound like there's a lot of steps in a settlement, and that's really true, but we take care of most of these processes in the background so you can focus on your day-to-day business. Just remember, don't let a case lapse or be surrendered until you know the fair market value for a life insurance policy. And with that, I'm going to turn it back over to Tara Sewell to finish the drawings, and good luck to everyone, and thank you for your continued business. Tara.
Thank you, Neil. Life settlements are just another way that we can assist you in helping your clients with their current financial circumstances. Contact your internal wholesaler at Financial Markets to discuss your potential life settlement case. Now we are on to our fourth finalist. Just to recap, we have 3 finalists so far: Kirby Bowden, Rob Lane, and Ross Bauer, and we are looking for our 4th finalist for the gun safe or the smart TV. Our 4th finalist, Ruby Harrison, with 363 tickets in the hat. Neil, is Ruby on the call?
Let's take a look here. Ruby is on the call.
Congratulations, Ruby. And then we are on to our 5th producer draw. And we have drawn Ruby a 2nd time, so we are still looking for our 5th finalist. Wayne Breetag with 399 tickets in the hat. Is Wayne on today's call?
And Tara, Wayne is on the call.
Congratulations, Wayne Breetag. So we have 5 finalists: Kirby Bowden, Rob Lane, Ross Bauer, Ruby Harrison, and Wayne Breetag. They are our 5 finalists, and we will reset our hat. and get ready for our final drawing.
Very good. Well, congratulations to the 5 finalists. We'll see who's going to be the ultimate winner. But, hey, thank you so much for everyone that qualified for the 2021 FMI Agent Point Awards. We'll be traveling at the beginning of June to beautiful Fort Lauderdale, Florida. And we're doing a very similar promotion here in 2022 with as little as $1 million of annuity premium or $30,000 of life premium or any combination thereof. You and a guest could be on our 2022 FMI Agent Point Awards trip. Now, with the political and global uncertainty of, goodness, where do I start? We got viruses, we got wars, all kinds of stuff. We have not announced the destination, and we'll do so in September of 2022 so that we be sure we'll be able to attend the destination proposed. But, keep an eye out for that coming. You'll get your monthly point award sheets that you can keep track of where you're at, or when you log into fmiAgent.com, if you look on the right-hand side, you'll be able to see your current point status. So thank you so much for all your business counting towards that, and we hope to see you at some beautiful destination.
Thank you, Neil. Okay, I have our 5 finalists shuffling in our hat, and we will drop them in our hat for our winner to see who will be our winner for the flat screen smart TV or the locking gun safe. Drum roll, please.
It's rolling.
Our winner today, Ruby Harrison. Congratulations, Ruby. You are the winner of your choice of flat screen TV or a locking gun safe. And congratulations to our 4 runners-up on winning a $50 Amazon gift card. Our next promotion will be starting soon, so watch your inbox for details. Thank you for your time today, and thank you for your partnership and loyalty. Have a beautiful day.